I really don't know how to join the space. I don't see a link any.
You're muted, Sid. There you go.
Hi, everyone. Welcome to Ampleforth's Masterminds. I'm glad to see you tonight. We're sitting here with me, Sid, as a host. We have Evan and Brandon and VirtualBacon with us. I'll give a short introduction into Ampleforth Masterminds because this is the very first episode. We're giving this a different type of format. We want to really have an open conversation about the current landscape, about cryptocurrencies, obviously, about money in general, about technology, and what we're all building here in this space. So we would like to hear people's perspective, invite people with a deep understanding of money and technology, and just have a really good conversation. I feel like everybody can just give a short introduction. You can go ahead, Evan. We do know you, obviously. Uh,
Yeah, so my name's Evan. I'm one of the co-founders of Ampleforth and Spot, and excited to be here. I do think that we might want to change the name of Ampleforth Masterminds to something else. I mean, I didn't really have much time to think about it, but I don't think any of us here actually think of ourselves as masterminds. Um, there's a lot, there's a lot to learn about what's going on in the space, and my first suggestion is that we change it to this is actually Nitin's suggestion, money nerds, because we are nerds.
I like that very humble approach. That makes sense. Yeah.
Hey, my name is Brandon. I'm one of the other co-founders of Ample. Yeah, Evan, I totally agree with you. I think humility is probably part of what got us to take the path that we did. Understanding that we don't know everything and then asking questions to find out more. So yeah, I think that would fit the group really well.
Hi everyone. I'm VirtualBacon. Excited to join the spaces with Ample, and honestly, I'm just a big fan of what they've been doing for the past 2 cycles now. Really innovating in DeFi, trying to make something completely different that can be itself very practical. But also, I'm a big DeFi fan, so excited to this year ahead, honestly, and speaking today about what's coming up for like DeFi ecosystem, etc. I think there's a lot of good things that are finally happening.
Yeah, I'd like to start to kick off the conversation just about. I like to think about money in many different ways. It became pretty much literally like an exchange of energy. If you look at Bitcoin as being energy, while we come from ancient money or ancient money, if you could call it that way, as impressive precious metals and an exchange of something really tangible, and we're moving away from that. We're even moving away from paper money. It's a very big shift. It's like a cultural shift. People need to adapt to the idea that things are just completely becoming a digital or a virtual thing. I mean, even bacon became virtual. I'm sorry for the pun there. So we're literally on a crossroad right now where everything becomes digital, and to some of us, where it makes sense. Some of us that are very much engaged with everything virtual and digital, it makes sense that value needs to become something digital as well. But some other people are not really that far ahead yet. Um, I believe that it is maybe a little bit like technology is kind of filling like a gap of, I like to see it as magic personally. Um, I believe that technology is just, if you take away the physical thing of a phone or a computer, you're literally just having like a conversation miles away with someone. Like, oh, you're right. I think it's a really beautiful thing. So I
It's
like
like an internet telepathy.
internet telepathy. Exactly, exactly. That's basically
Yeah,
what it is.
I want to kind of draft off a little bit of what you said about, this concept of, an exchange of energy or perhaps an exchange of information. I think like those are very similar. Um, and get a little bit more narrow, right? Because I don't personally think of money as exactly the same as an exchange of energy the way like you know, a pool ball hitting another pool ball exchanges energy through some like elastic collision. I think it's a little bit more well defined than that. There's some piece of information. It's encoded in some object or value system or something, right? And it allows you to do a few things. You know, be a medium of exchange, be a store of value, be a unit of account. But really, it's something that gives optionality, right? So a very simple example would be like, let's just say I've got 100 seashells, and actually, rather, I have 100 cows, right? And I can now exchange them for 100 seashells. If I can use those 100 seashells to at any time in the future buy back 100 cows one at a time or all at once, or any number of other things, then I've gained optionality rather than kind of tending to a cow and feeding him and her and, you know, taking care of it in that particular way. I can encode that value into this medium of exchange in such a way that it grants me optionality. Now, if as time passes, the 100 seashells can no longer buy 100 cows, or perhaps if it can buy more than 100 cows, right? Then the kind of the balance is shifting. So if it can buy fewer and fewer cows over time, then I may have gotten some immediate optionality, but it's a race against time, right? To kind of cash in on that, and vice versa. If it's increasing over time, then I might be getting more and more optionality over time. So I think that it's a little bit, we can be a little bit more precise than an exchange of energy. That's kind of my first thought there.
Yeah. So my first thought when I heard your intro, Sid, was, actually the way you described it is something that isn't necessarily super new, but something that's been around for, at least a while, with respect to us. Like, so yeah, Bitcoin is, for example, a virtual currency or digital currency, but it's maybe not even the first one, right? So like when we, moved off the Bretton Woods standard and severed the connection to gold, and we have fiat money now. As far as like most people are concerned, like the way they use it day to day, it is kind of a digital currency, right? So like it's very rare that I deal with cash nowadays. And so like I pay virtually, it seems virtual thing. It's not a claim on any specific weight of a commodity or anything.
Yeah,
And
more direct, like almost explicitly, we know for a fact that the number of dollars in the universe greatly eclipses the number of paper dollars in the universe, right? So
exactly, yeah.
therefore, it must be mostly digital already.
Yeah. So Bitcoin was a very novel way to implement this with fewer reliances on centralized parties and that sort of thing. It brings a whole lot of great value and new use cases. But in terms of from an economic perspective or monetary perspective, it seems like it's something that's another riff on a theme we've already seen through history.
Would you say that maybe the programmability of the money is a big difference compared to any other digital dollar that already exists? Definitely,
Not necessarily.
The centralized aspect, obviously.
Yeah, I think that's secondary, right, to it being more commodity-like in its qualitative features, right? So I know that people talk a lot about kind of the excitement behind programmable money. It seems like we could do a great many things with it, and we can, but there have been programmable monies prior to this, like, Min often talks about an open API that's in India, right? That's been around for some time. And also you can use like things like Stripe and other kind of payment APIs to kind of program functions. I think it's more about its open nature, right? The fact that it's the big innovation was we created something that is analogous to a rock-like money. It was very difficult. Like gold was a natural resource, right? You can't arbitrarily increase its supply. It's durable, it's available, it's portable, it's divisible, etc. To be able to create gold is an endeavor that folks have been working on for a very, very long time, right? Newton famously, dabbled in alchemy and many, many others thereafter. So the ability to create a rock-like money, the way Bitcoin has been created, is a really big achievement. Now, on top of that, making it programmable is pretty cool, right? But it's I think that's how I think about the hierarchy of breakthrough.
I could do a whole rabbit hole on programmability of money here, so I don't even know if we're going to cover it everything in this episode, and we can maybe come back to it in the future. But yeah, I mean, the way I view Bitcoin is that, as one specific case, is it's a system that generates an asset. That's kind of one of the primary purposes. It generates an asset and allows you to trade it. If you look at just Bitcoin as itself, it is somewhat programmable. I mean, it has a scripting language, but it's not a Turing complete language. It's stack based. And most of the ways that people like program Bitcoin is not actually on the Bitcoin blockchain itself necessarily. It's through outside systems, centralized systems, maybe some combination of layer 2s and CeFi, that sort of thing. Ethereum kind of moves more towards the programmability natively, right? And so they have the Turing complete EVM. But if you look at most of the use cases about what people do when they say they're programming money or making Legos and that sort of thing, they're using highly decentralized infrastructure, but they're building fairly centralized applications, right? If they're programming with, say, USDC or a real world asset or anything that uses oracles, they're not really making the best use of the blockchain or the decentralized nature of it. Really, the benefit they're getting is they're getting a common execution environment. I think this is a distinction a lot of people don't really make. I think the decentralized nature of the blockchain created a Schelling point for people to go to because it had these great qualities. But the way they use it doesn't necessarily use those great qualities. So you could, in theory, have an EVM on AWS and get a lot of the same functionality. It would be just as good at satisfying users' use cases if everyone just magically decided that, okay, we're going to use this EVM in this data center. But there's just no Schelling point there. And so the programmability is an interesting aspect that sort of emerged from the ecosystem, but I view it as somewhat separate to the moneyness or the money qualities that the blockchain infrastructure actually produces.
I totally agree. And I think like if the simplest way I would describe what has happened here is somebody wanted to create, a digital money, right? Or a new type of money, a new type of gold. And what they did was they used something a little bit more bank-like, right? A ledger, right? That has accounts and balances and tracks transfers to and from these balances. That's not really, gold doesn't do that, doesn't have this ledger. It's just an inert object. And they used kind of technology and network infrastructure to decentralize that. And they carried with it the values of like commodity monies. It's like I could take this bank-like concept, balances, a history of like transactions, and this network computing infrastructure and create anything. But what did they create? They created something that carried with it the values of a commodity money, right? So it was really deliberate. It wasn't arbitrary at all, because fiat money utilizes a bank-like system, right? It uses network infrastructure and the internet in general, right? But it philosophically and functionally is very different than gold. And so, this was a very visionary design. And then, from that breakthrough, we, like Brandon said, had emergent qualities. Well, look what we used this ledger, we used this network infrastructure, right? Can we make it more general and programmable? And that happened, and now new functionality has emerged, but not all of the new functionality is as kind of watertight in its deliberate value creation as a function of this new technology.
But I
I
love
think,
the Sorry, go ahead.
I would love to chime in here. So I'm honestly not a big, I'm not well versed enough in technicals of Bitcoin, but from what I've seen like over the years, like basic developer knowledge is like the choice of making it not as powerful for scripting and for general programmability is just like for more so for anti-fragility, less so for like the moneyness of it. It could be, but it just has more attack vectors, and but doesn't actually change the moneyness of Bitcoin. So, and today you have plenty of networks that are similar, like having schedule, this and that with their monetary policy, but also full Turing complete smart contract language. Technically, those are money, but ultimately, that's not. Just because you say this doesn't, like, you make it programmable or not, and it technically could be attacked more or not, is not the main thing. I think the main thing that really separates Bitcoin is its like long history. Everyone agrees that it should be made this way, and so it hasn't been changed. Right, that philosophical like design is much more important than adding on some more scripting, and that's why it's so unique. And it takes time for people to agree that, okay, this is the way we want to take Bitcoin's direction, and that's ultimately why, like, you can try to copy everything and try to make a more powerful Bitcoin, but it's not going to be Bitcoin, because of the time and the first to do it over this period with so much that could have gone wrong but not going wrong. Yeah, I guess that's aside from the limited supply part, it's the like rock-like part, right? So it's people want this thing to be a rock.
Yeah, talking about time, it really was like a unique thing to come into the world at the right time as well. They often say that the biggest things have to just be timed right, because if they would have been launched another time, it would just not have grown or gotten any attention. When I remember early days in the internet, it was just like double spending issues were really like all over the place. People, their bank accounts were getting hacked, transactions were being falsified, and I feel like Bitcoin was actually really just solving that issue at that moment. Right now, people, they don't realize that. I believe that the double spending issue that Bitcoin solved was pretty big back then. It was just pretty quickly afterwards that other systems and other digital monies basically adapted, became more secure. Technology and just coding in general on internet was just really surging and changing a lot. But the time that Bitcoin came out, that was a huge deal to fix, I think.
Yeah, I'd say that Bitcoin did two things. So one was, solving the double spend problem, which had never really been solved in the general way that it did. But two is Bitcoin, it was really the first example of a monetary asset that's not, backed by any external thing that arose out of scratch, right? So that's the first time anyone had really done that. I think that is also very important to what Bitcoin is, and the choices it made are very important to allowing that to happen, right? And so I think because that was such a huge challenge to solve, right? Bitcoin had to be minimal, right? So any other bell or whistle that put on there that wasn't necessary to the core thing it was trying to do could only really be a liability. And so I think that's part of the DNA of Bitcoin. It had to be simple and minimal and remove any excuse for not allowing this social consensus to happen around it.
It's funny. Yeah, I totally agree. There's another kind of funny thing where, like, I remember not so long ago, maybe just last cycle, a lot of people were poking fun at Bitcoin for being a pet rock or a dumb rock. And I remember thinking to myself, it's like, wow, it's a really big accomplishment to have created a rock-like money, a commodity money. And that was right at the cusp of this transition between the world adopting the narrative of digital gold over digital cash. Now you've got institutions buying Bitcoin ETFs. Why? Because they place a great deal of value on a digital gold, right? Why would I want a digital cash? Cash goes down like this. I want a digital gold because gold goes like this. Gold, this, pet rock, this rock-like money has a huge market cap. Bitcoin's market cap can grow to that. And that's why they value it so much. And so it's kind of ironic that, it was being made fun of as a pet rock, but actually, more institutional and financial minds of the world like place a lot of value in things like rocks and dirt and land and oil and infrastructure and things like that. And yeah, it's just gone through this amazing journey. I often, think about it as a very convenient lie, right? Masking an inconvenient truth to when they called it a peer-to-peer digital cash. Yeah, I mean, I think Bitcoin came out at a time where like the population of people who might get excited about alternative money or something like that, maybe like engineers or anarchists and things like that, like couldn't easily get excited about gold and therefore not couldn't get easily get excited about a digital gold, but they could get excited about a digital cash, right? And so although the creators of Bitcoin, I think, fully understood the nature of fixed supply monies and its similarity to gold, the decision to call it a peer-to-peer digital cash might have been very kind of strategic in that it could compel an early cohort of users to actually adopt, embrace, and kind of imagine what such a thing could be. Now, as time has passed, the qualitative realities of Bitcoin having fixed supply and the quantitative realities of gold just being a much more rapidly appreciative type of asset, fixed supply assets can appreciate, has finally had like allowed us to like shed the inconvenient lie and embrace, or say shed the convenient lie and embrace the inconvenient truth of digital gold. And I can foresee like this sort of similar evolution happening again, for DeFi, for other kind of innovations in the space. It's kind of like the early adoption curve, right? You've got these like visionaries, you got the normies, and you got the laggards. Visionaries really need to kind of live in this hopeful future, whatever kind of captures their imagination successfully, to kind of help nurture and graduate this like network or product into kind of a more of a mainstream space. But really, the mainstream kind of deep pocketed institutions have always valued gold, um, and they're always trying to escape inflation. So why would they care about cash if you're just thinking about it that way?
Somehow this whole adoption curve and the whole process that crypto and Bitcoin have been going through makes me think of the quote of Gandhi when he said, first they ignore you, then they laugh at you, and then they fight you, and then you win. So first we had that stage of ignorance, we had the laughing, and then we had the SEC fighting, and eventually now we seem to be in the stage where, yeah, we're winning, I guess, in the sense of being accepted. I do wonder though if in general, also you've mentioned DeFi in general, do you guys think that the trust in a new type of money, the trust in technology, the trust in code to be so valuable is already like at a level that we can actually move forward and that we can really get DeFi into a mainstream adopted kind of thing?
I think it could be a really powerful backend. I've talked about this a little bit before. I think most people today aren't valuing decentralization perhaps as much as they should, and we can talk about why or why not that may be the case. Like in past cycles, just really briefly, it seemed like regulators came hard on DeFi protocols because they looked more like they might be exchanging securities or violating securities laws and things like that. And they kind of really pushed the space towards stuff like NFTs and almost, implicitly they pushed the space towards memes. I think DeFi, it's kind of like starting with Ethereum is a language for constructing simple banks that allow you to exchange and borrow these rock-like monies. And I think it's the sector that is closest to finding product market fit that this space has kind of come up with. I mean, I guess there's different levels of product market fit, but yeah, I think in terms of it becoming widely adopted, I kind of see it more as
Evan, we're having a hard time
behind the
to
scenes.
we're having a hard time to hear you at the moment. Yeah.
I'm sorry. Um, so I kind of see DeFi a mass adoption as something that might happen behind the scenes. Like, for example, a whole constellation of consumer applications that provide DeFi yields to real world users, right? In DeFi, we think of like 25% yield on a stable pair as being good, right? In the real world, we think anything that beats 4% is good, right? If you can offer the yields of DeFi to consumers, not necessarily through an app or two app, maybe through like 100 apps, um, DeFi will have been widely adopted and without, anyone even knowing it. So that's very possibly, one of the future it's just like Bitcoin, right? It's adopted now, and it's like buying pizzas or coffee with it. It'll one day show up as a 401k. Okay? The funds and sovereign funds will be, you know,
Evan, Evan, maybe at the moment it might be interesting to turn your camera off because your audio is often okay, but the connection seems not strong enough. I'm going to direct the question at you, VirtualBacon, because we all know you're a heavy investor in mainly DeFi protocols. So when we're talking about trust into DeFi, what are the things that you as an investor actually, what are the check boxes that really, hit it for you, that you get excited about?
So I think first of all, like, I'm pretty experienced in DeFi, but I think the core like real innovative DeFi that people treat as DeFi is like very small sector, but everything people do right now in crypto is DeFi. Like meme coins are DeFi. It's based on Uniswap. It's based on like how CLMM is just UniV3. Like it's all together, right? So I think if you are bearish on DeFi, you're bearish crypto right now, unless you only use Binance. So I think everyone is kind of bullish DeFi because they're using it. Now for me, if we're talking about like DeFi in terms of yield, then it's got to be like safety first. And I don't think anyone's code is like they can say, oh, like it's, I don't know, formal verification, safe, sure. But I think most people are much more comfortable with test of time, test of TBL, maybe insurance behind it, maybe some form of a third party through Coinbase Prime or stuff like that. And that, package that all together, you have multiple fail safes, then you have a like much lower probability than just trusting one smart contract. That's on the yield side. I mean, obviously on the practical usage side, whenever you are like, it's really first principles. Why are these guys from Wall Street and even like Larry Fink coming out and saying, oh, we want to put our stocks all tokenized and trade them? Yeah, they can have this narrative, they can help sell their ETFs, but also ultimately it's the fact that DeFi is like DeFi is 24/7. It's global. It's anyone can trade it, unstoppable, right? And that's ultimately what it is. So anything that really leans into that enables it and solves inefficiencies in real world, like you're trying to trade a stock and you are like, we're pretty privileged, we can access the S&P, but for example, like you're in China, and whenever I see like these Chinese social media accounts that they recommend people, oh, how do I get even 7% yield per year, they can't do that because they don't have access to the S&P or the NASDAQ easily. They literally have to go through the barrier. But if you have a tokenized version, you just do it, and who's going to stop you? So I think ultimately that's what it is. And obviously there's still arbitrage right now. Like DeFi yield is higher because there's higher volatility. People are more accepting as to what can and cannot be done, and there's less fees being taken in the middle. So you can plug that in. But yeah, it's all going to converge. The yields are going to converge. But what won't change is that DeFi is global, 24/7. Anyone can use, and that's what will win. Basically, like you're not going to beat that.
Yeah, going back to your quote from Gandhi earlier, I try really hard not to look at the space through the lens of tribalism or battles or fighting. It's also kind of the way I've approached, the work that I do with Evan and the rest of the team and community and Ampleforth, is that I instead focus on creating something that has value, and if something has value, then it will get used by people. And then if more people, doesn't matter if anyone outside doesn't see value there, if they don't use it, doesn't stop the people who do see the value. And then ideally, as more people see value and enter the system, then that just creates even more value. And so when you talk about like DeFi and applications that are geared for users to interact with, you really need to focus on, okay, what's being offered, and be really concrete. What's the value proposition? What is this doing for people? And so I think that's really where you got to start. And trust is like one axis of value, right? And so like you see this trade-off all across the crypto space, potential high rewards, but going along with that is high risk, or less trust, all the way down to blue chips that have maybe lower rewards but much higher trust levels. And so that's just like one dimension of utility. And that just gets stronger over time through the Lindy effect, and as systems continue to exist with little amounts of change, that's how you continue to bolster the trust behind systems.
I'm guessing that a president that is completely supporting DeFi and cryptocurrencies in general is also something that will boost some trust. I think VirtualBacon, you maybe have some more of an insight in the new developments, and I believe today even there was a lot of commotion about things that Trump said. Is that right?
Yeah, the thing today is interesting. So basically, there's been rumors that Trump is going to allow, consider U.S. based crypto companies with their tokens as part of their reserve. And obviously, the Bitcoin thing isn't even going to happen very quickly. So this is just take it with a grain of salt. But we do see the date and the Trump executive order. All of this has been brewing for quite a while. So at the SEC, they have had a public list of day one priorities, aside from firing Gary Gensler, which honestly doesn't really matter that much because he's just a spokesperson. But they do plan to change a lot. For example, there's this DeFi inclusion thing for including certain DeFi providers as money transmitters, such as Uniswap, so that you can't use it legally in the US, like gray area. They're most likely going to remove that law, so should be okay there. And then Hester Pierce, the crypto mom, he also said publicly that as long as they're definitely going to reconsider like the staking aspects and what they can and cannot be included in ETFs. So this right now only benefits Ethereum. So all the ETH ETFs, like they took staking out before they got approved, that might be added back in, which is pretty cool. And then you have Trump, like him or hate him, he's like actually one of the most ballsy, launching all kinds of stuff using ETH, like his own NFTs, his DeFi platform based on Aave, so all of that, and their public wallets. There's just a lot that could come out that are not that like official reserve thing. I'm not expecting any of these DeFi tokens to go into US reserve. But in terms of regulation, in terms of how people treat them, there's a lot of soft stuff that they can do that's going to bring excitement back to DeFi. That's what I think. Yeah, and all of this is like day one. Like they planned this right at January 20th, right after inauguration. SEC is going to make some changes, so we'll know quite soon, actually, like next 5 days. So definitely looking forward.
Yeah, I'm really looking forward to kind of just a better regime in general. I kind of want to circle back to what you said earlier, Dennis, about like everything being DeFi. I do think you're right about that, right? Everything beginning with Bitcoin, you know, is an asset that can be transacted, right? Including NFTs, right? And they're assets that have money-like qualities, better and worse. Um, but I do think what we mean by DeFi, like what I guess the space means when they talk about DeFi, is something a little bit more specific, which is things that might run into securities law violations, right? Things that exist on this banking layer level of like, I'm going to take these rock-like assets or art-like assets and do something that resembles securitizing them, you know, but may not actually be equivalent to securitizing them. So I think there's this like really interesting thing where like, I don't know if I have a commodity, like gold. I've got a gold bar. I slice it in half. I melt it down, one of the halves down. I fashion it into a necklace, and I sell it to somebody. You know, have I created a derivative? Am I selling a security? Um, in that sense, and you know, the answer is no. And I think the stricter regulatory regime would interpret like the kind of the modification of these rock-like monies to create more useful derivative utilities as kind of security-like as opposed to commodity-like, and um, it really doesn't map to that underneath the hood. Um, just the way these kind of modifications are made on chain is structurally different than how they've been done traditionally, and so um, it's a long-winded way of saying that like by lifting kind of the constraints on DeFi, we can make these things a lot more powerful and a lot more useful and a lot more beneficial to society.
Yeah, I totally agree with that sentiment too. And I think that's been kind of the story of the last few years around us, is just kind of the chilling effect of it's sort of like hard to directly observe, but nonetheless there, chilling effect of the existing regulatory and uncertainty around that, right? So I think everyone, or at least me and Evan, agree with the idea that the most promising use cases of this technology around us is probably going to be kind of financial in nature. So when I think about DeFi, I make it as a dichotomy between like DeFi are things that are explicitly financial, and this narrative thread that was around for a long time, Web3, which was kind of more internety, but just on top of a different technology stack. So like I remember going to DEF CON a couple years ago and them explicitly highlighting that they wanted to promote non-financial use cases. And that always kind of made me a little nervous about the direction of the sort of ecosystem. Because of the uncertainty and harsh penalties for making a wrong step in the sort of DeFi world of crypto, it's kind of suppressed any kind of development from happening. And so that's led to the sort of state that we're in now, where we primarily see a whole lot of just, it's kind of ironic that the safest thing to do is just meme coins and things that are just sort of obviously not sort of like serious or like trying to fulfill a real use case. And that's a direct result of the regulatory system we've been under. And so if we can get something that is friendlier to developers, maybe we can get more development happening, within the US or within, jurisdictions that a lot of people kind of view as safe. And we can get more applications that are actually more valuable, more directly valuable to people. That would also impact the public perception of the work that's going on here too. So hopefully they can see more things, more valuable things, and not just, meme coins popping up and then disappearing a week later.
Well, that makes me want to ask a question, which is extremely difficult to answer. But since we're seeing all these very new developments and the approach towards DeFi, what do you expect to see happen in the next few years? 1 year counts for 10 years in crypto. We all know the meme, which is quite true as well. So yeah, in just the next foreseeable future, the next few years, how do you think that DeFi is going to shape them. And of course, we just said DeFi basically means everything crypto, but like, let's say specifically the decentralized financing tools like staking, anything like that, how will that develop?
I can chime in here. So I think short term, it's looking quite good for what people want, which is like deregulation, because it has been very like wrongly regulated before, just treating everything as not okay. Like, I don't know if you guys observed this, but if you make a pure, DAO based kind of DeFi coin and then you only trade on Uni, at some point you run into problems when you're big enough. I think it's a good thing that in the short term that they want to bring down that friction. But I don't think that will be long term sustainable. So this technology is good. Like the fact that you can, people still do ICOs in weird DeFi ways. People do token issuance through meme, through pump, and through this and that, like fair launch. But ultimately, at some point, your tokens are either going to stay in the gray area or it becomes like semi-regulated, right? And I do think it ties very closely with DeFi. Obviously, you have the staking parts, you have the yield parts, which are so far not so much problem outside of staking. Like staking comes first and then yields just on top. It's all in the same basket. But I think what's very likely to change a lot is the new token parts. Like when you're launching a token, when you have a token to trade, and how can you offer that? At what extent? Like how big can it get? I think once we have Trump in and we have this like wave of, we want more, clear regulation, at some point people will realize, okay, what they mean is clear regulation is not no regulation, because that's not reasonable for them either. So yeah, I think the trading parts as to what you can kind of offer for tokens to trade and who you can offer them to will be very different, even like 2 years out from now. That's an area I'm sometimes even a little bit worried about, just how people perceive regulation as good coming up.
Yeah, good points. Yeah.
It's hard to guess where regulation will go, especially I don't consider myself plugged into the political sphere in the least. And so I'm just sort of observing just like any other person is, so I can just sort of make guesses. But in terms of the way I expect people to use DeFi is, I'm going to use a term that Evan brought back earlier, and the term is just like a different backend. So I just want to like throw my support behind that idea as well. Like when I talk about the work that we're doing with family and friends, and I say, hey, these are the sorts of things they can do, they might get really, really interested and they ask how they can get involved. I'm actually kind of hesitant to tell them how, because that means that they have to manage their private keys securely, have good, solid info security around all their devices. And that's a difficult thing for most people to do. So it's very important that layer is there for people to opt into, but it doesn't mean that everyone has to. Like, it's not necessarily the case that we're building a separate system that's totally distinct from the finance that's been built up over decades, right? They can sort of work together. And it's likely the case that, if DeFi is going to grow, it's not necessarily going to grow on chain. It's going to be growing with people using what appears to them to be much more normal applications, but maybe interacting with DeFi for the features that it's able to offer.
That's a really good point. I had a few older ledgers laying around here, and I was hesitant to actually gift them to my family for Christmas because some of them have been buying cryptocurrencies because of me. I pilled them, so to say. And I thought, it will probably be the easiest to just keep um, their money or investments on a centralized party, sadly enough, because it is too confusing to go on chain. So it's a pretty good point that you make there.
Yeah, I'm also not like an expert on regulation at all, but like I do think the bottom line of where the limit is going to get pushed, it seems to live in this space of like there are certain things that can be created that simply can't be stopped. Maybe they can be kind of constrained into some corner of the world, but they're really difficult to truly stop. Like for example, something like Bitcoin, or even like let's just say Uniswap or a fork of Uniswap, right? These would be difficult to entirely stop, right? So maybe one regime says like, okay, you can't exchange your money from a bank to Bitcoin and vice versa, right? There might always be some other regime that allows you to do that and therefore spend the Bitcoin and so like it would have some value and it would not be easy to stop. And I think that pushes kind of the direction of like, okay, of the regulation. They might have to embrace this view that's like, okay, well, it can't be entirely stopped. We can try to limit it in our environment, but if we do that, then someone else has a huge economic opportunity that's made available to them by opening it up in their environment. Um, and and then we can't really keep our hands on it. It's and so we might as well allow it to happen openly, allow a suite of convenience kind of services to emerge, an economy of that to emerge around it, and then regulate those things. That might be like where the line of regulation ends up being. And so anytime somebody comes up with like something really novel and decentralized that can't be entirely stopped, we kind of tip the balances a little bit, right? And push kind of the direction of regulation to embrace and regulate kind of on the fringes.
Yeah, I think one thing that kept regulations off so long is because we're in this endless space, right? How can you how will regulations really be applied to something that's so wild and so open and anything can happen anywhere? I keep wondering actually how regulations will really be applied. Will they be applied on the level of you are exchanging your money to your bank, or in what way will regulations really be enforced the most when we talk about regulations coming in? I think VirtualBacon made a good point that token sales and launches will drastically change probably with newer regulations. But when it comes down to on the individual level, like what do you see happen?
So I think as long as you don't get on the radar of things, like it can still happen. Like I think this is part of the reason why the meme stuff is so interesting on Solana, for example, but not so much on ETH. Like Solana by design is just like smaller, cheaper coins, right? Gas fees are lower, higher frequency, easier to onboard. People care less about self custody. So the expectation that you have there is like, oh, I hold a coin for like 1 month and it's like 1 million. I want it to go to 10 million. That is never going to get on the radar of the SEC or anyone with regulation, like unless the whole platform is kind of under scrutiny. But Solana itself is pretty sound. So then you just have like, I don't know, maybe Jupiter or like Radium and stuff, like potentially having an IP problem just like Uniswap being limited. But as long as the core technology there works, it's pretty okay. Like that scene will still be there. But then this whole concept is kind of anti-utility because like you have a coin that's only people expectations are 1 month. Like how are you supposed to build a business around that? So for larger projects, for teams that are delivering something bigger, like if they want to raise money and they have a whole launch plan, that is going to be I think it's much more interesting to look at what's going to happen on ETH and what sort of approaches people can have where they start on uni, they start on DeFi basis first, and how big can they get, and what kind of hurdles will they have on the way, right? I think that part is kind of unsure, because looking back at like DeFi Summer or ICOs, both of those mechanisms of creating businesses on chain is iffy now. People are pretty hesitant to go fully that way, so decentralized. So I think that's interesting, and whatever emerges there might even be more opportunity for like just general investors. But so far, it hasn't happened yet, I think.
I mean, I think that's a really good example of like, of what I was just talking about, where like, okay, I can't stop somebody from creating a meme coin on Ethereum and making it tradable on Uniswap. We know that. There's people creating meme coins on Solana and trading them, right? And maybe I can regulate that, but if I do, they're just going to do it anyway on, maybe I can stop them from doing it, but if I do, then they're just going to do it on Ethereum anyways, right? And so perhaps I should just allow it and regulate it so people don't stop doing it in this kind of environment where I can kind of regulate it, and at least like, put up basic sanction requirements, but yeah, I think that that is an example of kind of competition from a truly decentralized perspective or pressure, kind of creating opportunity for pseudo decentralized kind of variants of it. It's interesting.
Yeah, on the opposite side of regulation, I think will be born more DeFi primitives, because it's turn complete. You can make anything. So I don't think DeFi will die necessarily, but
Yeah.
it will have to evolve again.
You can make anything. That's
Yeah,
a really
I mean, literally, you can make anything on Ethereum. That's why it's cool.
Yeah, absolutely. Absolutely. It was a pleasure to have this conversation with you guys. Thank you, everybody, for tuning in and listening, watching live with us as well. We will be hosting more episodes in the future, and we'll consider renaming. We'll see how we can be a bit more humble, and not call ourselves Masterminds. Yeah, thank you guys so much for this conversation, and see you soon. Bye, everyone.
Bye, guys.
Thank you.
Thank you.
All right, thanks.